Cryptocurrencies, things like Bitcoin, Ether, Tether. You may have heard of these, even Dogecoin, which is a bit of a joke, right? And yet it's not a joke anymore. Bitcoin and all the cryptocurrencies out there have had a tremendous impact on the world. And honestly, the impact is probably just beginning. Now, on the far end of the spectrum, it's not really on the spectrum, but there is also the central bank digital currencies. They're really fundamentally a different thing, but we'll touch on them real briefly. But I want to just walk you through a fair and even-handed explanation of what are the cryptocurrencies, what is the utility of them, what type of infrastructure do they need in order to still exist, how reliable are they, and how secure are they? And these are a whole bunch of questions that need to be asked and discussed. I mentioned cryptocurrencies back when President Trump addressed the Bitcoin conference, and I kind of realized that a lot of people probably haven't read into the cryptocurrencies and Bitcoin as much as I have, and so I thought that it would be good for us to just have a conversation about what these things are. Now, you know already that I am a big proponent of precious metals, silver, and if you can afford it, gold. I don't actually have any gold, so I know a lot of people are probably going to be more in my boat, where stacking silver is, as much as you can. But, even that's still pricey, right? But gold it's expensive. Bitcoin is expensive too, but you can buy just little pieces of it, right? Bitcoin is the main cryptocurrency. Now, there's kind of like the main Bitcoin, and then there's a bunch of other ones that they're not up to the level of Bitcoin, but they're kind of in that same sphere. Things like Ether, even I guess Dogecoin and stuff like that. These are the big names that everyone kind of goes, oh, okay, I've heard of that, or I'm familiar with that. These are the ones that people are trading back and forth, but Bitcoin is the big one. Bitcoin is the financial gold. There's other ones that have more utility, like Ether. For full disclosure, I have some Ether, but not all that much, right? I think like maybe $30 or $40 worth of Ether, basically just to have it, right? Anyway, so Bitcoin's the big one, but what is a cryptocurrency in the first place? So basically, a cryptocurrency is it's like a bank account, right? And just as an illustration, it's like a bank account where the bank says basically, Steve has, $500 in his bank account. Do I actually have $500 sitting in a actual place in the vault that says Steve Poplar? No. They just have their computer system, and their computer system says that Steve Poplar has X amount of money in his bank account. And it has that record, a ledger of everyone's how much they have. The difference between cryptocurrencies and a bank system is a bank system is centralized. Their bank computer has all that information. And that really becomes a problem when you're trying to transfer money from this bank to that bank, because that bank doesn't know if you actually have any money in the bank account, right? Their banking system doesn't connect up with this other banking system, so they need some sort of way to communicate back and forth between them. Whereas cryptocurrency uses a distributed ledger. So if you take your laptop, take your computer, and you set it up to mine Bitcoin, you're not digging in the ground for Bitcoin. What your computer is doing is your computer is helping do the complex computations of checking the ledger. So the ledger basically gets updated every little bit of time. And I'm not an expert on this stuff. I don't talk cryptocurrencies, so I'll just point you in the right direction. You can go find out more from people who know more. I'm just dumbing it down for how I understand it. But so they have a ledger, but that ledger is on many, many, many different computers, like thousands, hundreds of thousands of computers all over the place. And what happens is, so basically you submit a transaction. You're like, I want to move some of my Bitcoin to this person over here because I'm buying a pack of gum or something like that. So you're going to transfer this Bitcoin from your wallet, which is a digital wallet, which is, once again, kind of like on the ledger. It doesn't actually exist, though you can put it on a flash drive. So you can put it on a flash drive and then put the flash drive in your pocket or in a vault or something like that, and it has the password and everything to your Bitcoin. And everyone can see that you have that Bitcoin or that fraction of a Bitcoin, but until you give the command to transfer that or some of that to another account, it just kind of sits there belonging to you. Now, like I said, this isn't actually a thing. Bitcoin isn't a thing. It isn't even lines of code. It's the idea that there are X number of Bitcoins out there, and there's only going to be a certain limit of Bitcoins ever. So it's inherently deflationary. So there's no central bank that's like, oh, well, the economy needs more Bitcoins, so I'm going to pump out more Bitcoins right now. And then later on, like, oh, well, we need less Bitcoin, so we're gonna tighten things up. So there's no central bank. The Bitcoins get released on a set schedule to reward people who do mining. So in order to incentivize people to use their computers and to build networking centers and computer centers, servers basically, to do all this processing to make sure that the Bitcoin transactions are super secure, in order to make that worth their while, they get pieces of the Bitcoin as rewards. So if you have what's called a mining rig, or you can basically use any computer, but it's not as optimized as a mining rig is. Basically, it's a gaming visual effects chip, or a rig has a bunch of them in there. Very good at processing numbers and crunching numbers. And that's what the Bitcoin, and then the other cryptocurrencies is going to be relatively similar to this, generally speaking. Though there are different strategies, there's different ideas out there. But generally speaking, there's a ledger, and it's not held by one party, it's not held by one computer system, it's spread all over the world. And then every so often, it does an update and says, okay, here's all the new transactions. We're moving a little bit from this account over to this account. We're moving a little bit from this account over to this account, and it computes all of those trades, and then basically what it does is it kind of writes out what the status of the entire network is, who has all the Bitcoin, who has how much, but there aren't names attached to these. So you can see all the wallets, but you don't know who that wallet belongs to. So if you're like, well, how many Bitcoin does Elon Musk have? Well, you'd have to look through all the wallets and try to figure it out yourself, which is not impossible to do. And that's one thing I will point out there that's not discussed as much as I think it really should be, is the fact that the federal government of the United States, as well as other governments out there, they can track your Bitcoins. Now, there's a whole bunch of moves that you can do to launder your money. And people who have stolen Bitcoin before or committed frauds have had the government come after them, and they've tried to launder their money. Basically, take Bitcoin from a known account that is invalid, that has stolen this Bitcoin. You want to get it to a wallet or wallets that are not linked in any way to the crime. So how do you get them from there to there? You have to send them through ways of laundering them by playing gambling. There's services out there that actually do scramble up people's accounts and stuff like that. But that only adds a measure of improbability to tracking you. You can still be tracked. The more sophisticated computer systems out there, the more sophisticated services and agencies out there can track pretty well through these things. And historically, they have tracked people who have tried to hide money transfers and tried to be all sneaky about it. They've gotten busted. So that is an interesting thing. Whereas if I want to know how much Elon Musk has in his bank account, there's no way I can find out. Unless he actually opens up his bank account and shows it to me, I'm never going to know. I can't call up the bank and be like, hey, how much money does Elon Musk have in his bank account? They're going to be like, none of your business. You'd have to break into their computer vault and log onto their system to be able to look that up, right? You'd have to know his account number and all that kind of stuff. Whereas on a distributed ledger, everyone has the information. It's just they don't have all of the information, right? And so there's privacy, but then there's kind of like no privacy whatsoever. It's an interesting system. But the idea that one person or one business doesn't control the ledger, but rather everyone participates in controlling the ledger. So it really makes it a community project, and that's why you can kind of see some people being very adamant about this. So let me give you my gut take on this. When I looked into it real heavily a couple of years back, really, my gut was that the future is digital currencies. Cryptocurrencies are the future. You will be using them. What's that look like exactly? I don't know. You will be using them. Which ones of the cryptocurrencies are going to continue forward and are going to be super important? Probably Bitcoin. Some of the big names are getting established enough that they're probably going to be a big deal in the future too. But though the systems, the utility of these systems is going to be the future, the distributed ledger, super important. It's the democratization of finance. I can't even underscore how important this is. They're already working on, and actually I think they've already, years ago they were working on it. Now it's been out for a while. If you want to sell your home, they can do a distributed ledger where you actually mark and cover all the transaction to do this. And you don't need to actually physically sign it because you have the digital signing, and there's ways of this changing contracts out there in tremendous ways. It can replace law firms, it can replace accounting firms, it can replace banks, which is why banks hate cryptocurrencies with a passion, because they know it's their jobs, okay? They know it's their business on the line. If people all adopt Ether to transfer money from one company to the next, and they don't need a bank to process that, and the bank can't sit there and take fees and have all your money sitting there, you can see how they're going to lose out a lot. So the networks are super important. The utility of these systems is going to be super important. However, a lot of people have been using these things as investments. And that, my friends, I do not like. I do not agree with using Bitcoin, buying up Bitcoin in order to sell the Bitcoin to somebody down the road. Now, at this point, is that probably going to work out? I would say probably. It's probably going to work out. As people start using these systems, the currencies on the system, as long as they're deflationary, like Bitcoin, should theoretically go up in value. As more and more industries and banking companies and investment companies pick up more and more Bitcoin, there's only so many Bitcoins to go around, so really it just has to go up in price so that everyone can have a a set value of Bitcoin in their pocket, so to speak. So, but here's the problem with investment. First off, the argument is that it's deflationary. So there's only so many Bitcoins. There's only so many Bitcoins, but there are always more coins. There's always more cryptocurrencies being invented. Dogecoin, right? A perfect example. Basically, they took the computer code from one of the other cryptocurrencies. I forget which one. I'm not sure if it was Bitcoin or what. They basically copied the code over. And then they put a meme dog, a dog making this funny face. And it was supposed to be a joke. But the thing is, because they copied the code off of the other thing and people thought it was a funny joke, it kind of blew up. And it became kind of a fairly big cryptocurrency. Dogecoin, like as a mispronunciation or misspelling of dog coin, it's just, it's one of those things where it's just like, it's kind of funny, but at the same time, you know, when you have a banking system and an investment system that has stuff that's valued in because everyone thinks it's funny, makes you realize how young this whole industry is. Now, Ether has been really moving forward. Ethereum has been moving forward with really institutionalizing a lot of tools. And so Ether is kind of more where the banks are going, where the banks are trying to transfer money between each other. They're trying to do a lot of these digital contracts on Ether, from my understanding of things. Bitcoin is more like, this is where we store our value. Ether is kind of more like how we do cool things. Now you can move from Bitcoin over into Ether pretty easily, and you're also going to be able to move around your money using stable coins. These are coins that don't really have value. They don't really have fluctuating value. That's a better way of putting it. So like Tether, USDD, USDC, usually these are pegged one of these to $1, $1 US. And so these are kind of used as a proxy, a frictionless proxy for the dollar, because it's hard to move from the cryptocurrencies to dollars. So you can move from Bitcoin to Tether, and then from Tether over to something else, or you can move with these exchanges, you can move straight from Bitcoin over to Ether if you want to. But if you're like, I think that I think the cryptocurrency is going to go down for the rest of the day, so I'm going to move my money over into Tether and sit there. Now, there is some interesting stuff going on with things like Tether. Is it a true stable coin, and is there shadiness happening there? Possibly. There is a lack of accountability for a lot of these things, and some of these companies have just been doing stupid stuff in order to make some quick bucks. And that is a big problem. There's a lot of money flying around in cryptocurrencies. My recommendation and my personal position of where I am is, if you can't hold it, you don't own it. And so physical things, I think, are the way to go. And here's why. Let's say I buy a bunch of Bitcoin. Can I use that Bitcoin if there's EMP? That was a question that one of you guys threw out there, and that kind of made me realize I should answer some of these questions. So because the ledger is distributed over in China, India, South America, El Salvador has been doing a whole bunch of mining. Russia's got a whole bunch of mining rigs. So the ledger is spread across the world. If an EMP hits the United States and you're in the United States, that's a problem for you. Because one, you don't have access to the ledger anymore. Okay, so it's yours, but can you access it? And without the power, without the computers, you can't. You can't access it. So is it really in your possession? No, it's not. Now, you need to be reconnected to the network so that you can get onto the ledger that you're transferring this Bitcoin from you to the person you're buying stuff from. Is an EMP going to wipe out all the computers in the world? Probably not. So it does make it very resilient that way, and that's cool. But in a crisis situation, it won't do you all that much good. In a power outage, EMP type situation, it won't do you much good. Secondly, there is the fact that though the encryption is extremely, extremely powerful on Bitcoin, so basically by having more and more people with their computers doing the mining, it allows it to put layers of encryption upon encryption so deep that it's unthinkable that someone could crack through the layers of encryption. However, government computing with quantum computers is moving in that direction. People have crunched the numbers and stuff like that, say it's not a problem right now, but it may be a problem in the future. And that's concerning. If anyone were to, like China or the United States government, were to build enough quantum computers that they could then monkey with the distributed ledger, that would be a big problem. Now, again, the ledger is distributed. So not only would they have to crack the ledger, but they'd also have to hack a lot of computers in the world. A lot of computers, like over 50% of the computers on the network. So they'd either have to knock most of the people off the network and then attack the smaller number, or they'd have to attack just a gross, insane number of computers and mess with the ledger. It's hard to understand how that could happen, but you also have to realize the billions and billions and billions of dollars worth of value that would be accessed by pulling that off. So is that really theoretically a problem right now? No, but the governments are messing with these cryptocurrencies when it comes to investment side of things. The U.S. government has seized a whole bunch of Bitcoin. Donald Trump was out there saying basically all the Bitcoin that the U.S. federal government has should be put into like a Fort Knox, a digital Bitcoin Fort Knox. We should use it as strategic investment, like a strategic petroleum reserve, but a strategic cryptocurrency reserve. Not really necessarily going out and buying more, but not selling the Bitcoin that we have. So in criminal enterprises and stuff like that, a lot of these criminals have hidden their money in Bitcoin or Ether or these other cryptocurrencies. And because of that, when the government cracks down on these crimes, it has a tendency to seize a bunch of these coins and such. So what does the government do with them? Does the government just go out and sell them on the open market? Because a lot of times they're dumping a lot of value on the market, and it really kind of pushes the price down. So that's a concern out there. And then there's also what the problem called the whales, the whale problem. The problem is that when Bitcoin got started, you could get like several thousand Bitcoin for like chump change, like, you know, a few bucks or 10, 15, 20 bucks. Now, when you're looking at over $40,000 per Bitcoin, there's some people who got in really early and they just scooped up a whole bunch of these Bitcoin like, hey, maybe these will be worth something someday. And they're thinking like maybe this Bitcoin will be worth like $5 a piece someday. But the simple fact is that they're now worth over $40,000 a piece. And if you have a couple thousand of them, you start doing the math on that and you're like, that's a lot of money. And so you have these whales who have been holding on for dear life for a very long time. And the question is how many of these big whales are out there where they've been just sitting on large amounts of Bitcoin. And so there's these bubbles in the system. And these bubbles have been slowly getting popped as time has gone on. But there's still supposedly quite a few of them. And that does make the market inefficient and potentially open to these people dumping large amounts of Bitcoin out there that the market can't absorb, and it just, air pockets the price down. I personally don't think investing in Bitcoin or Ether is a smart move. Now, will it work out for you? Maybe. Is it a safe, stable, good idea? I don't think it is. Now, if you want to do that and it's your money, I mean, it's a free country, free world, go do what you want to do. If you're listening to my opinion, it's my opinion. As an accountant, I would suggest maybe, if you're going to invest in it, make sure that the money that you invest in Bitcoin, as Dave Ramsey would say, make sure that that's money that you're willing to lose. If there is even a hint of a hack on the main ledger for Bitcoin, the value of Bitcoin will plummet like you've never seen before. If the federal government of the United States or another country goes after Bitcoin and it looks like it's going to shut it down in that country, you may see the price of Bitcoin drop dramatically, that in ways we haven't seen in a long time. It's extremely volatile. So if you're looking for a get-rich-quick scheme, this is probably not a good way to go. I believe that you should educate yourself on cryptocurrencies. You should buy a little bit of Bitcoin, buy a little bit of Ether, buy a little bit of Tether, and you should have access to wallets. And you should get into good practice of understanding not just using the exchanges and having them hold your cryptocurrencies, but rather learning how to hold your own cryptocurrencies yourself on a flash drive, on your computer, making sure that you have the passwords backed up, that you have them written out, and you have them inside a safe, that kind of thing. Practice good discipline on securing your cryptocurrencies and know how to use that cryptocurrency to transfer value to other people. I think that's super important as well. All right, friends, I'm not an expert by any means on these things. I have looked into it extensively for myself out of my own curiosity and whether I should jump on the bandwagon. But you got to make choices for yourself. Hopefully this has been helpful. If you have some other stuff you'd like to share, please do pop it down in the comments down below. If there are people trying to get you to buy from them, don't listen to them. Go to Coinbase, go to some of these exchanges. You can buy cryptocurrencies through things like Robinhood as well. But do your homework on how to buy and how to store your cryptocurrencies in your own wallet. That's the important thing that you really need to take from all this stuff. You need to learn the utility of this and how to transfer from your phone to somebody else's phone value. And that's you circumventing the banking system. And that's really cool. That's like super cool. But where are you going to store your value? I think that storing it in physical goods, canned goods, up to a point, real estate up to a point, precious metals up to a point, finding places where you can hide your wealth and your value is a good thing to do. Having it all sitting in Bitcoin, probably not a great idea. Some of you guys got in very early and you're doing awesome, and I'm so happy for you. That's cool. But it is what it is. Hopefully that's been relatively fair and even-handed. I think it's got tremendous opportunity and value. I know that X or Twitter, Elon Musk is playing around with trying to do their own cryptocurrency over there, that they're going to use Twitter as a super app that you can transfer money back and forth with people. So it's going to be like a PayPal but Twitter hybrid. When that comes out, that may be really interesting. If it gets you around the banking system, I'm all for that. There's lots of great opportunities out there with cryptocurrencies to take back control of your own wealth and be able to spend money like cash without the paper trail, without the privacy invasions, but be understanding where the limitations are and how much privacy you really do have, because it's not as private as some people make it out to be. All right, friends, hopefully that was helpful. If it was, make sure you hit that thumbs up. Let me know down in the comments down below. I'm sure I probably said something wrong here or there. I try to correct myself when I did stuff, and I tried to let you know when I felt like I was getting a little out of my depth or a little technical that I didn't have all the answers to on those things. But if you want to check out another video from this channel, there's another one right up here. Thanks so much for watching. Steve Poplar of the Poplar Report out.